Welcome to another episode of the brand called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from thousands of successful individuals from around the world. I'm your host, Ashutosh Garg, and today I am delighted to welcome a very respected and accomplished professional from North Carolina, USA, Mr. Allen Lomax. Allen, welcome to the show.
Well, thank you, Ashutosh. It is so good to be with you. I'm really honored to be with you and your audience.
Thank you. Allen is the founder and chief executive officer of Steed Capital. So, Alan, before we talk about financial resilience and a lot of the knowledge that you have, tell me about your own journey from academia to a seasoned investor.
Well, thank you for asking that. And yeah, I'm happy to uh, share my journey and well, I think my journey started really, or I guess one of the more significant moments in my life was when I was actually in the seventh grade. And I and my family were sitting around the television. In those days, there was only one screen in the house, and it happened to be black and white.
Yep.
Well, a special came on the program, and it was a special about homosexuality.
Mm-hmm.
And that was the first time that I had ever heard the word homosexual.
Mm-hmm.
And as we were watching the program, I was listening to these people who were being interviewed. Their faces were smudged out, their identities concealed, and their stories rather bleak. And I had the immediate realization that they were talking about me. And believe me, in those days, that was not rainbows and unicorns, but it was like a ton of bricks had just descended upon me. So I went into a state of deep depression and isolated and remained that way for really a good portion of my life. On top of that, I'm also dyslexic, and it was in those days, there was no diagnoses for that. And so I was labeled as not very bright. And in spite of that, even in spite of a high school counselor recommending that I not go to university, but that I go into a trade, I did find a university that accepted me with a very lackluster performance. I did graduate, and I got married. And uh, even after all of this, for the next several years of my life, I just went through lackluster job after lackluster job. And finally, my wife had had enough, and she ended the marriage. And at the time, I thought that was just the end of my journey. And I look back upon that moment, though, as uh, the worst day and the best day of my life,
Mm-hmm.
because I went into to psychotherapy. And it was like a light switch. One day I was blind, the next I could see. Within a year, I had made significant personal transformations. I went back to university, got my master's degree in counseling, and then secured a university counseling position and completed my PhD. And in terms of finding life and satisfaction, I never thought before that time, I never saw myself as a counselor, as a psychologist,
Mm-hmm.
and yet it became a driving passion in my life.
Mm-hmm.
Even with all of this, I also have to say that I was still very much in the closet. I mean, I was a dyed-in-the-wool homophobic,
Mm-hmm.
and so one of the reasons I went into counseling and psychotherapy is I'm going to fix this. And it took really another 20 years before I finally accepted the fact that I'm put on this earth as I am, and I am born with my own special blessings.
Yep.
And finally came out of a closet bigger than a Kardashian's, and have been living a fulfilling and happy life ever since then. So, in short, the question you ask is, how did I transition from academia to real estate investing? Well, first of all, I had to get into academia, and I didn't get into academia until I was 42 years old.
Mhm.
So I'm very much a latecomer to that. But even though I was very passionate about it, loved what I was doing,
Mm.
I also knew that I wanted to develop wealth and that I had a really good lifestyle, enjoyed it, had surplus income, but I knew that wasn't going to develop wealth. And so I started looking into real estate, and I got my first real estate investments, and started out in single family like a lot of people do. Uh, was um, I was living and working on Guam, and I purchased some property back here in the States and built a house with what we call a mother-in-law suite so that I could rent out the main house and have a place to come back to. That worked out well. And so when I came back to the States, I actually just kind of replicated that several times, did a number of fix and flips and purchased a small mobile home park and was doing amazingly well. I thought I was very wealthy. In fact, by my standards at the time, I was really quite wealthy. I lost everything. I
Mhm.
lost the job I loved, and I lost a significant portion of my real estate holdings. So that was the dark, dark moment in my life.
Mhm. Mhm.
And and even though I here I am a counselor and work in psychology, I did everything you aren't supposed to do, and and it took me really a good another good 5 years of my life to really get my life back
Wow.
together and
Wow.
get back on my feet there. So so that's my journey,
Mhm. Well, that's
and
thank you for sharing this. Man,
sure.
what an amazing journey you've had, Alan. Really grateful you've shared this with our viewers and listeners, and of course with me. Let's talk about, financial resilience. And as you mentioned, at one stage you were extremely wealthy, and then suddenly you realized that you'd lost a lot of it. My first question for you on resilience, or financial resilience, is what are some of the key pillars of financial resilience that you learned, especially because of a crisis or during a crisis?
Well, I think first of all, I think my life journey, not there's a lot of people out there who are wealthy who have never essentially growing up emotionally and psychologically. So you don't have to have your life together to be wealthy. For me, myself, and I did. I had to grow up and become an adult before I could get my act together to even begin to develop wealth. But in answer to your question, resilience, uh, and for me, and just looking back at that time when I lost everything and when I did everything wrong, the first thing to come out of that, the first thing I had to do was to really realize that this is a grief process. I mean, when we lose a loved one, we realize that that's a grief process, but we don't necessarily look at financial loss as a grief process. So that's the first thing I had to do is realize that I'm grieving a loss and it's a major loss
Mhm.
and go through those stages
Right.
of grief. And then the other thing I had to do is I had to forgive myself.
Mhm.
I did a lot of things wrong,
Mhm.
and I had to accept that I had done that and acknowledge that yes, I had a lot of guilt for that, and because of that, I experienced a lot of humiliation and shame. And so I had to forgive myself
Mhm.
and extend to myself that empathic understanding and unconditional positive regard that I would have given to anybody else in
Right.
that situation, but I
Mhm.
wasn't extending it to myself.
Mhm.
And then the third thing is that I had to realize that I had allowed myself to develop a fixed mindset. In other words, this is the way it is. It's always going to be this way. Get used to it. And I had to redevelop that growth mindset and go, this is temporary, this is a challenge. I can deal with it. I can make changes here. And then the fourth thing is, and this was really important as well, is that I had to learn to ground myself in the present moment. The past was past. The future is always uncertain and always unknown. And the only way to find peace of mind and resilience is really to come to the present moment. And it was the horses in my life. That's where I found that present moment, and just spending time. I wasn't doing anything with them. I wasn't writing. I wasn't training. I was just in their presence.
Mm.
And they know how to be present. And so they taught me
Well
present
said.
moment living.
Well said. But the other aspect of investments, Alan, is diversification. That you had a very large amount of money in real estate, as you mentioned to me. But as an investor, I'd love to get your perspective on what role does diversification play to maintain financial stability, especially during turbulent times?
Well, diversification is extraordinarily important. There's no investment out there that doesn't carry risk with it. And I think any investor really needs to understand that. And, thank you for bringing this up because diversification, I think, is one of the best risk mitigation processes that you can
Right.
take. And different people have different views on what diversification is. A lot of people think you should have a certain percentage in stocks, a certain percentage in other private equities, and a certain percentage in real estate. And I do think that's a good strategy. Me personally, I still have, I'm 100% invested in real estate, but I consider it to be a really diverse portfolio because I'm diversifying across a number of different
Thus,
well-vetted, experienced
mm,
syndicators, and that puts me in a very diverse geographic area. I have properties all over the country, and most of them are in multifamily because
mm,
multifamily is one of the most recession resilient assets out there.
mm.
But I diversify across geographic areas and across syndicators. And I think it's very important. Maybe I should listen to other people's advices, but I've just personally, I've never done enough study and investigation in the stock market
Yes.
to feel
Yeah,
comfortable investing there myself.
I
I
agree.
know real estate and I understand it.
Absolutely. But when I was reading about you and preparing for my conversation with you today, I was fascinated to read about your talking about an emergency fund. I wanted to ask you, how important is it to have an emergency fund, and what ballpark percentages of income should be allocated to it?
Well, very good question. And had I had emergency funds back in 2007, 2008, uh, I could have come through that with a whole lot much more equanimity and a whole lot
Mm,
more grace than what I was able to do that. So I think it's very important.
mm,
And in terms of percentage, I don't know that I have a set percentage. The more,
mhm.
the better. I don't think you can have too much emergency
Right.
funds. The way I do it, when I say we should have emergency funds, I don't recommend people just putting them in a savings accounts that's earning 2.5% or even in CDs that might be earning 5%. You're not even keeping up with inflation.
Yeah.
So that's not a way to do that. I have it in whole life policies, and I have my reserve fund
Mm,
in appreciating assets, and I have uh, lines of credit that I can draw on in those times of emergencies.
mm,
So my treasure chest or my reserve funds are are in assets that are appreciating. They're continuously building a hedge against inflation. They're recession resilient. They uh, are places that are reducing my tax liability, and they are also cash flowing, and I can leverage them. So all of those things, even though those are my reserve funds, they're not just sitting there
Well said.
doing nothing.
Absolutely. Agree with you. Alan, you also speak about aligning passion with financial well being. I wanted to get your perspective on how does one determine if their passion can really be turned into a viable business model?
Well, I think that's a good question that we should all be asking ourselves.
Mm,
And I don't know that just because we have a passion that we have any business turning
mm,
it into a profit area. I mean, I love horses. I love music. I love counseling and psychology, and that has been a way of earning money. I've never turned it into an entrepreneurial endeavor. Um, there, as I think we all need those things that we can be passionate about, and I think we should keep them sacred.
mm,
They don't necessarily need to be meshed with
mm,
making money. Um, and yet there are people out there who have meshed both of them, and they're doing well, and they uh, and it then and the profit margin feeds the passion, and if you can marry those two, I think that's very, very wonderful.
mm,
Um, and but I'm very, very passionate about raising capital. I'm very passionate about wealth development, not just for myself, but for all of the investors that are working with me. I'm really, really passionate about those things.
mm, mm,
But is it the same thing as my love for horses, my love for music?
mm.
It's a different kind of passion. I don't know if I'm answering your
No, no,
question there, but
you have absolutely. Moving on, you are a qualified psychologist. You are using psychology to invest. I wanted to ask you, what are some common psychological biases that impact investing, and how can some of these be overcome?
well, I think it's just it. I think this applies across the board, not just financially, but I mean, I think it's critical thinking skills
Hmm.
that are important, and it's the things that get in the way of us investing uh, successfully are the same things that get in the way of us being successful in
Hmm.
life. It's fear.
Hmm.
Uh, it's it's fear of what's going to happen if we do this. Fear if we don't do it. Uh, is the market going to crash? Is this investment a lousy investment, or is it a good one? In the same thing in our personal lives. If I go up on stage or if I come on your podcast, am I going to make a fool of myself in
Hmm.
front of everybody? So we have to deal with our fears and we have to move forward. But I'll give you some suggestions here in a moment how we can do that. And the other is the confirmation bias. Uh, we have our own biases
Correct.
and we look for ways and means to confirm that
Hmm.
rather than looking for information that contradicts what we already have and want to believe.
Hmm.
This, in terms of investing, uh, when we get offering memorandums from syndicators, they come with all these beautiful pictures of these properties, and we can fall in love with
Hmm.
this property from looking at all those beautiful pictures and confirm our bias that this is a beautiful investment because the pictures are beautiful,
Yep.
and we don't look at all the finances
Hmm.
and financial information involved in that. And then the other is just our own hubris. overconfident in what we think we know and we don't. And we can uh, and we like to think we're logical people, but we're not. We're emotional people and we're gullible. So how do we overcome that? Well, first of all, we develop critical thinking skills. We learn to ask questions. We learn to look beyond our emotions. We get educated. We build our networks, and we find uh, mentors who we can reflect all of this
Mm.
off before making big decisions.
Well said. Great response. I have time for two more questions. What role does emotional intelligence play in successful investing?
Well, for me, it was just everything, and
Hmm.
from sharing my story. That's one reason I shared my
Yeah.
story with you is that until I grew up emotionally, there just wasn't any hope that I was going to be
Mm-hmm.
successful in anything, much less successful financially.
Mm-hmm.
So I had to grow up emotionally. I had to have a solid emotional base in order to develop even a beginning foundation to begin to developing financial wealth. And to me, it's absolutely essential. And then the other aspect of that is that once you grow up and you develop your own emotional intelligence, then you find well-being in your life and purpose and passion and meaning. And then the financial aspect of that, I mean, that's just icing on the cake. It's not the essential part
Mm-hmm.
of your life. It's just the icing on the cake.
Well said. And my last question for you, Alan. What habits would you recommend for individuals aiming to grow both personally and financially?
Well, the first thing I would do is to go into psychotherapy. Psychoanalysis is a wonderful thing,
Mm-hmm.
and it helps us to see what it is in our life that we've been in denial about, what we've been repressing, suppressing, and to bring all of those things to the forefront and really see the shadow parts of ourselves.
Mm-hmm.
And with that, we can grow immensely as people and individual. And then with that, it's easy. We get whatever education we need
Mm-hmm.
to learn whatever kind of investing we're going to do. Get educated, build your networks, and then it kind of brings us back to where we really started here is uh, to forgive ourselves,
Mm-hmm.
move on, move forward, give ourselves the grace and equanimity that we would give anybody. Um, Develop a very, very strong um, growth mindset and find a place to be grounded
Mm-hmm.
every single day.
Well said. And on that note, Alan, I just want to say thank you so much for speaking to me about your own incredible journey, sharing your story. We covered real estate finance in some degree of detail. Thank you for talking to me about some of the key pillars of financial resilience during a crisis. You shared with us the role of diversification and how important it is. And I just love the way you explained how you have diversified your portfolio within the real estate portfolio. And I thought that was a very different perspective. You also shared with us the importance of an emergency fund and the importance of the emergency fund to keep earning something rather than just lying in a bank. We spoke a little bit about uh, converting our passions into a viable business model. And then you talked to us about some common psychological biases, the role of emotional intelligence, and you gave us some interesting thoughts on how individuals can develop habits to grow personally and professionally. Thank you again for speaking to me, and all the very best to you.
Thank you, Tash. It's been a pleasure being with you.
Thank you. Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.